Finally folks, our drawn liquidity is hit, but we exited partial profits. So let me break down the trade. So first of all guys, there was this 4 hour internal range liquidity to this external range liquidity. Here you can see that our drawn liquidity is reached, but I exited at partial profits. So let me explain why. So for our IRL-ERL, so this first of all guys, you can see that here we exited in minus 0.2 pips. Why? Because I moved my stop loss to break even, and price once again tapped into break even. After that it reached the target drawn liquidity, you could say, but we made partial profits on real account. So let me explain why. So first of all guys, for our IRL to ARL, and then on the 2 hour chart it's the same 2 hour IRL to this external range liquidity, and then on the 1 hour also from this internal to this external range liquidity. And then what happened was, on the 15-minute chart there was an SMT here where a fair value gap was respected. On this swing guys, this swing I'm talking about, this swing a bullish fair value gap was being respected, whereas this swing was disrespected on dollar index by disrespecting this 15-minute fair value gap. Although this both 15-minute fair value gaps aren't identical, you can see that here there is a fair value gap, but you see it here, just a second guys, but if you see it here, there is only one fair value gap, but if you see it here, there are two fair value gaps where this fair value gap was disrespected, whereas this fair value gap was respected. So whenever I take trades, you could always see that the same fair value gap gets disrespected, but this time we took the swing. It doesn't mean the same fair value gap should get disrespected and others should not. That's not SMT guys. The swing low should be protected due to a fair value gap. That is what required. Even if you see that here there is only one fair value gap, but here there are two. So this was disrespected and this was respected, but here there was only one fair value gap which got disrespected and price made a sell side sweep. So it's important guys, which makes a sell side sweep and which respects a fair value gap. It doesn't mean both of the fair value gaps should be identical. So this is the 15-minute fair value gap where this swing was respected, 15-minute swing was respected due to this bullish fair value gap, whereas the same bullish fair value gap was disrespected and price made a sell side sweep. So higher time frame was telling bullish. So if 4 hour, 2 hour and 1 hour aligns with this 15-minute, where would the price want to move? It will definitely move to this buy side, right? And after that, a 5-minute market structure shift. You could see that here I wanted the price to close above this, so that's what happened here guys. After that we exited at partial profits because you could see that here price reached our drawn liquidity at one asset. So if price reaches the drawn liquidity at one asset, we will definitely exit both the assets. So I immediately exited on this Usdjpy when the trade was somewhere around here at partial profits. Why? Because price reached our drawn liquidity here. As you can see that I exited exactly at this bullish candle here. You can see that price moved a little bit and then it dropped to break even, in which paper trading I put my stop loss at break even, so it immediately exited, but we booked our partial profits here. You could see that at 6:20 AM Monday 25 August. What was this closing price? 147.423. That's where we exited on our real account. Because why did we exit? Because it reached our drawn liquidity here exactly. It reached our drawn liquidity, that's why we exited, because our rule says when one of the asset reaches drawn liquidity, when one of the correlated assets reaches the drawn liquidity, where dollar index reached it here and US dollar Japanese yen did not reach the drawn liquidity at that point. So I immediately took my partials, that is immediately took my profit partials and immediately exited completely, because it reached our drawn liquidity here, and that's where we exited, guys. On this bullish candle here, you could see that at 6:20 am we exited immediately when our take profit was hit, because my rule says that when one of the assets reaches the drawn liquidity, we should immediately exit the other. That's why I did. I could have reached my drawn liquidity without hitting our stop loss, which was here. You could see that it could have hit our take profit. That's why it could have hit our take profit, but still exited at partial profits. We are happy with that, because our rule says, our model says, this is the rule I made: when one of the asset reaches the drawn liquidity, which reached here, then immediately exit from everything, immediately exit from both the assets. That's why I exited at here. So thank you, guys. We booked partial profits. That's okay. We reached our drawn liquidity without hitting stop loss. Everything was perfect. This picture perfect on this trade. I am happy with partial profits. No problem. Thank you, guys. Our model reached the drawn liquidity without hitting our stop loss. Thank you.